we complete this session with a final panel, and therefore I asked to come on stage again Linda, Zeilina, Sean Kidney, Márton Varga is already here, Andreas Rajchl, und darüber hinaus begrüße ich Sasa Eichberger, Senior.
And then I also welcome Andreas Rajchl and Sasa Eichberger, Senior Environmental Specialist at World Bank, on stage. And then I welcome Thomas Reininger, Senior Principal Economist for Central Eastern and Southeastern Europe at the Austrian National Central Bank. Thank you very much for being here and welcome to stage.
To chair this panel with 5 excellent people here. You already heard in the morning, you listened to Sean Kidney. You hopefully had also the chance to listen to Andreas Rajchl. You just listened to Linda and to Márton. Now, I would like to give a very special welcome to Sasa Eichberger. He was already introduced. He's a senior environmental specialist at the World Bank with decades of experience in green and climate finance. And as a result of the fact that he's the only panel member who up to now has not had the chance to take the floor and to make a presentation or a keynote, we would like to give him a bit more special attention and grant him a bit more time. And so I invited him also to make a brief presentation. He will make a presentation on the international climate finance landscape and also a bit focusing then on the World Bank activities and the activities especially also in the ECA region, which is an acronym for Eastern Europe, Central Asia region. And we are all aware of the fact that for Austria and also for the Austrian Central Bank, the financial interlinkages and the real economic interlinkages between Austria and the region are very important, and so it really deserves a bit more attention. I would like to warn you, the slides are quite rich of information, but with the help of Sasa, we will be able to focus on the main messages, and for all the details, you can be assured that you will have later on the opportunity to download the presentation and to go through all the details. Okay, Sasa, the floor is yours.
Thanks very much, Thomas. So also, good afternoon also from my side. Thanks for the opportunity to talk about these topics. So Thomas actually asked me to prepare a little bit overview of the landscape and climate finance flows, where does it go? So I got together with my team and we tried to do this, and we very, very quickly realized that it's not easy to do a sort of a comprehensive and especially not an accurate overview of climate finance, global climate finance flows, where it goes, where it comes from, what it is used for. And so we gave up the idea of being accurate or being a comprehensive. So, but then when we made this our main storyline, we understood that it's absolutely not necessary to be even accurate, because the messages are so strong and so obvious that you really don't need to say where every single even billion goes. And with this, we come to the first message that I want to say, and that is why investing in climate action. And there is a very, very clear statement here that we have also heard a couple of times today, is that basically the cost of action, so what we need to do to, let's say, try to limit to 1.5 degree, and the cost of damages, only damages that would come if we stay by business as usual scenario, are like 5 times. So basically, there is a very, very clear economic reason why there is a need to do this. It's not obviously in this environment, I don't need to say this, but this is not any sort of ideology or activist speech. There is a clear economic rationale for doing this. Why I say this is because there are certain circles when we still have to repeat this. So let's say what about climate finance, how it is developing? Yes, it's increasing all the time. However, at the same time, investments in fossil fuels, and especially fossil fuels subsidies, are also increasing. And some of them, as you can see here, are increasing even much faster than climate finance. So what is internationally done to mobilize more and to see how this climate finance could be stronger? That is usually, I will just say about the UNFCCC framework. So at the last COP Conference of the Parties 29 in Baku, which was expected and seen as a climate finance COP, and it was supposed to deliver a lot in terms of climate finance. It did not deliver everything that was expected, but some couple of things have been still achieved. So for instance, we have a new collective quantified goal, which so that the contributions of developed countries to developing countries to address climate change is tripled. It used to be 100 billion annually, now it is raised to 300. Even more, in my opinion, more important is that this goal includes the target to mobilize more finance in addition to this 300 that should be used through blended to other mechanisms to mobilize more, especially private finance for this. And that is quite an important topic. And another important is to not just to be counting where the money goes, but to really see how much impact these investments make. And that's quite an important topic going forward. Another important, in my opinion, very important, because there may be some people here who still remember Kyoto Protocol and clean development mechanisms and carbon trading. So there is a finalization of Article 6 regulatory framework. It's been agreed upon, which means there will be like a framework open for carbon trading. And that means that has a really strong potential to mobilize investments for climate. So, distribution. So basically we can see, like I find this graph very interesting on the right-hand top side. So in 2018, large majority of climate finance has been deployed in advanced economies, which is basically what we see on the developed countries. And today, already in 22, it was completely different situation because China is catching up extremely quickly, and what we heard today is why it is happening. It is really not only because of climate, it is actually to address energy security, to address really common sense things. The second important thing is that 90% of climate finance went to mitigation. There are several reasons for that, but what is even more important, that only 10% go to adaptation. And also, private finance provided more than 50% of total finance. I assume that all of that went to mitigation because, like 90% of adaptation is still in public sector, which is really quite a significant problem. Talking about adaptation finance, yes, it is increasing. It's like doubled, but it is far below what is really needed. And this, what is assessed as needed, is also probably underestimated, because there is no really model that can say how much will be needed, because there is no historical value that we can rely upon, because we have never been in this situation before. So that's it. And also important is that initiatives with dual benefits, which is that they have mitigation and adaptation in one, are increasing, and especially in agriculture, because that is seen as a climate-smart agriculture. So basically when doing irrigation, to try to use some renewable energy for that, to try to save water. These are things that are common sense, and luckily they are becoming common sense more and more. This slide opens really interesting, many discussions can be, I will not go into it, but we can see here that what is the role of advanced economies, how much emissions are generated, what are the percentage of climate finance flows in it, and what's the population. So basically one can make many conclusions here. So what is emissions per capita, as well as what is the total investment and why. So, but what is clear from here is that basically, like LDCs and especially small island states and developing states, they need a lot and they don't get a lot. Of course, one can always say what is the absorption capacity to get the investment, but in any case, it's not enough compared to what they really need to address just adaptation needs. So the three persistent challenges in climate finance are, first of all, the lagging adaptation finance and the really need to mobilize private investment for adaptation. There is a chronic mitigation investment gap in high impact sectors, because we have seen also that the most of mitigation investments go to energy and transport. We know it here also, electric vehicles, renewable energy, solar panels. There is a big potential in industry, also in agriculture, that still needs to be, let's say, exploited. And of course, there is still growing investments in fossil fuels. Climate finance at the World Bank, really just very briefly. So the World Bank the World Bank sees is first of all largest provider of climate finance among MDBs. So it is climate change is a threat to a core mission of the eradicating poverty and shared prosperity. So the World Bank continues to support countries in resilient development and also low emissions growth and jobs creation. We have a climate change action plan that is guiding the climate action at the World Bank. And part of that climate change action plan is the commitment to climate finance. And the commitment is 35% on average from FY21 to 25. And that was in this fiscal year increased to 45%. So while we are mostly meeting these targets, let's see for FY25, 45%, the second commitment, which is equal share of adaptation and mitigation, is challenging, and we are not on track to achieve that. But that is a global problem. Thomas, also let me say a couple of words about exactly adaptation in ECA. ECA is actually Europe and Central Asia, so it's not Eastern Europe, but Europe, complete Europe and Central Asia. And because when we are trying to mobilize more adaptation finance, one of the things that we come across in ECA like a challenge is the awareness of our clients to the need for adaptation finance. They always say, we have other priorities, okay? So ECA is vulnerable to climate change. So it is, if we say the vulnerability is a product of exposure and adaptive capacity, ECA is exposed to impacts of adverse impact of climate change. This is becoming more obvious in last 5-6 years because of the crazy really increase of disasters in terms of frequency and magnitude. So this is like coming. The second interesting point is that ECA, in terms of GDP, has the lowest investment in adaptation in terms of GDP across all regions. And also that ECA's infrastructure requires maintenance costs which are much higher than other regions, and they are very exposed to climate change risks. So here is just, I will not go into detail here, so I really want to be quick. So this is like some food for thought, what countries could do to mobilize more adaptation finance, private as well as public. So thanks very much.
Yeah, thanks a lot for the presentation. For me, it was really a wake-up call to the importance of adaptation, because usually we are very focused on mitigation, and I think this came out very clearly. So how important it is to focus more also on adaptation, especially also traditionally recipient countries of the World Bank. They are very low-emitting countries, but they are very vulnerable, and they face really the challenge of adaptation. Second, also, how vulnerable the ECA region, so our region with which we are very interlinked, how vulnerable they are to climate change, and especially also the strong need for additional financing of adaptation in these countries. So I think these are really three main important messages for us. So thanks a lot. I would like to turn to you, Jean, now. You had already a keynote speech today. We got a very general view. Now, I would like to ask you to turn to the region of Central Eastern and Southeastern Europe and to tell us a bit your view of the importance of the role of green bond markets in the region, or also how important the region is within the global context from your point of view, and how important the green bonds are for these countries themselves. So perhaps just out of your experience, what is important from
I don't think
your
I
point?
need to say too much about green bonds. We've heard a lot about today, including from the Austrian government, which is a leader in green bond issuance, and so on. So that's kind of well established, and we have a lot of issuance. I mean, the Central Bank of Hungary has been a leader in this as well. We're both supporting green bonds with its risk rating programs, which led to a flourish of green bonds from banks, housing banks, to, of course, the sovereign issuance. And we've seen a few sovereign issuance in the area. So I think that's pretty well established. The more substantial issue, the topic of this panel, is transition, which is planning. Green bonds is simply an instrument to allocate proceeds, to match investor needs, and so on. We need transition to low carbon. Yes, we know that. That's part of this conversation. We need transition to resilience. It's not just a single form of transition. We need transition to a new economy. You know, in China, the 5-year plans for the last 15 years have been called new economy plans. And that's led to the massive growth for renewable, the massive growth for electric vehicles, the massive growth of intangible IT-related businesses as well, which have been fueled by national policy. We need these things as well. Part of understanding volatility, which is becoming the norm, and the global change that's happening, China, India, I can tell you amazing stories, Brazil, etc., is understanding what that could mean for at least the export industries of CEE, and the implications also for the kind of services and resources and equipment and gear that's going to become available to CEE. That's the transition we need to start thinking about. It starts at national. You know, I've just come back from Japan, where the government has a green transformation plan. They've now set up a separate green acceleration agency, which I'm an advisor to, where they have a budget of some $20 billion to allocate, this is a big economy, but to allocate towards subsidy programs, guarantee facilities, and so on. Like a mini World Bank, really. And it's directed specifically at supporting Japanese industry to transition to more profitable sectors that are green and resilient. Green is, in that case, low carbon is the primary target. But every country needs to be thinking about this. You know, this is, as I said earlier, simply business planning at a national level, and it has to work to large corporations as well. With SMEs, we need to help them to be able to transition. We clearly need to help SMEs, as we are helping households in Hungary, to be able to better prepare for climate impacts and better prepare for reducing energy bills, and so on and so on and so on. All of these programs are brought in place, but essentially transition needs to be suffusing all our thinking about the future. The future is going to be very different. Some parts of it I'm not very happy about. The fact that we are going to see more people die this year from heat than ever before in history is not something to be happy about. That's a sign that we have utterly failed in the last 30 years to get our emissions down. Hey, it is what it is, and we're going to have to deal with it. Let's at least understand the changes coming through, which are coming through quite fast, including the policy changes that are leading to economic changes in the region. I'm thinking about European Commission, I'm thinking about China policy changes that are leading to the auto parts industry in Hungary facing death unless it transitions towards supplying electric vehicles, cattle batteries, etc. This is happening. It's happening quickly. We have to prepare. Everything to do with taxonomy, with transition, with resilience has to be on the table now. Now, whether it affects your particular business or not, of course that depends on the business. If I'm running a clothes store in downtown Vienna, possibly not. Although I will tell you, one of the forms of fashion that's going to become very popular in many countries in the next few years is hydro shirts with cooling systems, so you can wander around in the heat. And in Dubai, this is going to be a hot product. And it could be possible that Romania is manufacturing these. Hey, you get the idea.
So, thank you, Sean. Quite inspiring, I would like to say. Linda, what is your view on the region, especially also on sustainable finance markets in the region?
I mean, I agree with Sean, and I already touched upon it, that we lack some sort of strategic vision for what the economy needs to be. So how do we fit into the supply chains, and how do we maintain that resilience, and whether we can rely on the markets that we have, or whether we also need to explore different markets, etc. I think that another issue here is that it's of course lovely to see the volumes and the issuance of green bonds and all sorts of other things, but if you actually look at the structure of the real economy, it's not necessarily really seeing a lot of change. So what is the issue here? I think genuinely we need to make sustainable business profitable. Once it's profitable, cooling shirts, cool, yeah, amazing. If I can lower my healthcare costs, etc., variety of benefits, makes common sense. And currently, you do see a lot in utilities, like, taxonomy alignment in utilities is high, etc. Well, these are the areas where people actually can gain money through it, right? It's about having lower energy costs. It's about cheaper energy. It's about resilience. So I think that that's a major element here. And then the next question is, of course, linked to this is we often see very good vision and some even amazing transition plans that I've seen from some businesses, but then again, they're not getting implemented in practice. And this is where you need different types of essentially structures built. We have one example in Czech Republic. I mean, this is already going on in several Western countries where investment funds build an ESG-linked carry mechanism where the general partner links their own remuneration to certain ESG environmental KPIs. And if they don't reach them, well, they get less money. Sometimes they donate the money to some environmental charity or something else, or give it back to the limited partners. So this actually incentivizes the board and the managers of this money to act differently and incorporate and measure and verify, etc. And that, of course, through the food chain, as I call it, then pushes, of course, the auditors, etc., to develop those capacities, etc., and tell other clients, because again, it's money. So I think instead of reporting, we actually need strategies that people are actually walking the walk and putting their money behind it. So I think that's what I would like to see going forward.
Thank you. I think following up on your presentation about the very, let's say, proactive attitude of the Hungarian Central Bank and the efforts to stimulate the sustainable finance market in Hungary, I would like to ask you, what is your view on the region? Are there other central banks in the region having a similar approach, taking green measures in this one way or the other? And to what extent you have some cooperation with them? And then, your general view on the role of green finance in Central and Eastern Europe.
Sure, thank you. So the picture in the region, I think it's very heterogeneous, let's say this. And also has, so we have to separate central banks and monetary institutions, because in that aspect, I think we do have a very, very limited room for maneuvering in a couple of years. But I see more space and more similarities when we think about the central banks or supervisors. What I just presented, for example, the borrowing-based measures, very similar measures have been implemented in Latvia and Slovakia recently. An interesting part that they have same objectives but slightly different approaches. So, for example, in Slovakia, it is what is common that all three countries' debt service to income ratio has been increased, relaxed for green loans. But for example, in Slovakia, you can only use it for renovations, and if you participate in a state-backed renovation program. In Latvia, eligibility criteria is wider, but for example, how they calculated this is somewhat different because they, as far as I know, colleagues at the central bank, they assessed the potential cost saving because of the lower utility bills, utility costs. While we, and this is how they find those right numbers, those right ratios that we can apply in the macroprudential toolkit. While in Hungary, we have, we try to measure what, or try to assess what is the potential additional outflow because of the modification of this limit, so slightly a top-down approach. This all three is a very recent example. And if I'm right, hopefully a piece of joint publication will be published in the coming weeks by my colleagues and by the colleagues of two other central banks.
Mm-hmm. Will it be published as a working paper of the...
as far as I know, yes, but I'm not very... so I'm not involved very closely. I just follow up these researches because I think empirical evidences and a very data-driven approach is crucial on this field.
Yeah, thank you.
I just the thought of Sean that was very moving, and so the importance of transition. And I wrote up one thing that, as a policymaker, what is important when we think about transition and how a service or product could be profitable, that it should be somehow scalable. So this is why green bonds are beautiful products, because you have a standardized solution.
Absolutely right. Now the question is, can we come up with standardized solutions that we can get business and so on to work as well? So we need to translate this into real economy stuff as quickly as possible. But that's the innovation we need, right? And that's where the leadership from government institutions is so important, to provide a framework and direction of travel, which is what you've done in your area of work. But we do need that corporate innovation. And we do that knowledge economy that Linda spoke about earlier.
Thank you. Andreas.
Budgeting.
Building upon your keynote in the morning, what would you see as the conditions for transition finance in Central and Eastern Europe, and what do you see as possible interrelations with the green finance agenda here in Austria?
I mean, if I may, I'll connect to what the other said.
Yes, that's perfect.
Until now, I think we know that some projects are profitable. We know that they're bankable. So here the question is, why are they not being rolled out? So it's either a hurdle somewhere on the bureaucratic side, on the approval side, or there's a hesitancy to invest into it in certain areas. But the economic case is there. And then we have other areas where the economic case is not there yet. And usually the problem is the scale of production, as you said. And this is where China is really good. China is really good in innovating production processes. And I think the CE region is a very good region about producing something. So maybe this is a good case for CE to look into how can they help in scaling up the technology production that we need in all of Europe. That's one reflection. The other reflection is green finance. We've started at the European level. A few years later, every member state, or most of the member states, have a national strategy. So we're looking at the national level. But I think there are two levels that are equally important we haven't looked at that much yet. So the one is the local level. And this is actually where we have a learning from our alliance. We have a quite diverse set of members. Some of them are very small, but they are close to the customers. And if they know what is needed at the local level in the small regional bank, they can translate this much better. And this is one of the benefits that we see from this alliance. And then the other level is the regional level. So we know Central and East Europe, the entire region is connected through value chains, often through manufacturing value chains, sometimes through energy value chains. And the transition will need to happen along this value chain. The investment needs will appear where the emissions are on this value chain. So perhaps we need to take a closer look at these regional interlinkages and then also think about, okay, can we maybe help the collaboration of the financial sector in the region? Can we help the collaboration of the real economy in certain sectors that are especially interdependent and where the value chain is not working with each other enough?
Okay, perfect. Thanks a lot. That's quite an, how to say, a proposal even, that one could try to establish more contacts in order to develop also a regional approach or a regional strategy.
It comes also from a learning that we've realized when the current economic situation appeared, and especially the car manufacturing, the automobile sector in Europe is in a difficult position. And Austria's industry is in the supply chain of this. So we're in a way dependent also on the decisions that are made in headquarters in other countries. And and at the same time, the headquarters in the other countries, they're also relying on the supply chain to move ahead together with them, to transform together. And there are certain initiatives in Germany, for instance, where a bigger car manufacturer worked together with the entire supply chain, the entire value chain, and the financial sector to make sure the investments happen at every stage of the chain. And this is something that could be replicated in other sectors, in other regions in Europe as well. We just need the capacity to bring the people together, or the people need to want to work together themselves.
Mm-hmm. Mm-hmm. Okay, yeah, thanks a lot. I thought for a second round that we could interact among us in the panel, referring to each other, but you already have done it spontaneously, so I'm very glad about that. I still would like to raise one or two questions to you, and then you can do the same then, and then I would like to open the floor to the audience. So my... So my question, because Jean, you said you put forward certain examples from outside Europe, how important are these transition plans and this approach really to plan transition. And I immediately wondered, how much does the population know about the national energy and climate plans? Each member state of the European Union has to draw up and submit to the European Commission. And obviously there is a lack of knowledge also about that. And I think perhaps this is a challenge for all the member states in the region, at least, perhaps also for the candidate countries, but also for Austria perhaps, to stronger communicate what are the plans where at least there is certain political commitment and political binding behind that. What is the content of that? Because we had plans also in the Recovery and Resilience program. We also had plans with a strong green component, but the awareness of the existence of these plans and the components and so, it seems to be quite low.
I don't want to know about energy plans. I just want the power on. I want it to work, and I don't want any blackouts, please, etc. Yeah. I want to know that my house is safe in a flood. Can someone tell me, is it safe in a flood? Is there insurance Apparently not. Apparently there's exceptions in insurance. My house isn't covered. That's what I want. I want a job. I want to know that my kids are going to find work. Where they're going to find work? Do I need to tell them to do X at university instead of Y? Is there a university place? That's what I want as citizens. Now, the plans we do, that's your responsibility. You're doing planning around macroeconomic. You're doing planning. We're all doing planning in our areas of work. And that's the way it should work. Part of this conversation, the key part of this conversation, is to inform the work for the institutions that we are responsible for. It's our job to sort it out. The idea of trying to convince people to understand what is frankly, in a day-to-day level of trying to get food on the table for your kids when they come from school, a very abstract idea, is an absurdity. It's a bit like the Shell idea of, worry about whether you're catching a plane or a train, whereas in fact, we just want to reform the aviation industry and the rail industry as technical managers of the system. It's our job to manage risk if you're an institution with that responsibility. Get it right and stop saying, oh, well, the population's not with us. The population just wants to get food on the table for their kids, is what I want to say. We live in a world which is run by institutions, which is run by companies, necessarily so. This has been an extraordinary achievement of the last 70 years. What we're talking about is those institutions properly understanding their responsibilities to create profit in the future and to meet the needs of their stakeholders in whatever way they do it. That's the job that we're talking about here. And when you start thinking about it that way, let's forget about ancillary things which are distracting. Let's just get on with doing it, because once you're aware of the problem, it's pretty straightforward what you've got to do.
Yeah, but I think, Sean, there's one missing thing. We all know what we need to do. We just don't know how to get re-elected. So I think there's a major issue here, right?
Donald Trump shows you don't need to have any policies to get re-elected.
Yes,
And
true,
you can have 3 terms.
And 3 terms.
well, you just need to be against something, right? And here I think one major messaging and communications issue that we have is that, if you talk to people in very simple terms, I did a TV interview recently, and they were like, well, talk to like your auntie from a small town. And I'm like, wow, okay. So that actually makes you think, right? So taxonomy, now tell the granny. And you're like, oh, okay. But the point is, right, do you like clean air? Yes. Do you think those who pollute your air and your water should pay? So it's the externality pricing in. Yes, yes, yes. Do you feel comfortable that you as a taxpayer, like every dollar or pound that you pay in taxes, 50% goes to clean up private sector mess? No, no, no. So it's the same bank bailout issue that we understood, and people were angry about bailing out banks. Well, now we're bailing out a systemic failure. And all that our politicians do is like, migration bad. You know what I mean? It's actually very depressing that we know what needs to happen. We should be able to calibrate also the comms, but somehow we systematically fail amongst those actors who actually agree to drive that change and to help with the comms.
But your implication is that we're going to win the election on climate or not. There has not been an election in the world, apart from in Denmark, where I would argue climate has been
but not climate,
factor.
no. We need to talk about exactly what you said.
Exactly, the day-to-day
economics
things and the implications.
Okay,
Sorry.
But maybe to add to that, I think what you're talking about is we need to make it very easy and beneficial for consumers, right?
Yeah.
And I think the central part is the energy system. As soon as we have renewable energy abundant, then we can start making products that are beneficial for the consumer. In Austria, for instance, during the day, if it's windy or when it's sunny, we have 0 costs of electricity at the moment. In the evening, they are high.
Bitcoin mining, that's what you're doing.
No, but the solution is it's becoming more interesting to have an electric vehicle.
Yeah.
You charge it during the day free.
Wow.
And the same thing the same thing happens when you have a washing machine and so on. If you're worried about your energy costs and you have more flexible prices during the day, you can take advantage of this. And I think the energy system is in the center of all the sectors that needs to transform. For the industrial sector, for the mobility sector, and so on. So as soon as that ball is rolling, I think we can connect the business cases and the benefits.
Andreas for Prime Minister.
Thank you. No, I would like to open the floor briefly for one or two important questions. So who thinks he or she has an important question to ask? Please feel encouraged and not discouraged. So it maybe also there is some not so important question. Still welcome. Please.
So my sledging Central Bank, I don't know whether Central Bank of Austria, I don't know whether important or not so important. I have a question for Márton Varga. How do you make sure, by the way, your survey or answer suggestions, I found them very suggestive. One answer type is missing. The Central Bank should not act at all.
Okay.
With respect to green objectives. So this is the reason why I didn't answer. So just, to let you know that there might also be others like me, and the whole picture might be biased then. I would like to ask, how do you, as a central bank, make sure that the various objectives that you have don't contradict each other, especially that your green objective does not contradict the major objective, and not only that it does not contradict, but that you don't actually incentivize risks or contribute to the emergence of risks for the other objectives, especially the primary objective, price stability and financial market stability.
Okay, thank you. Please,
Thank you.
Márton.
So the truth is that in the survey there was an option for I don't know, but I didn't want to include it. Okay, true. Noted, and next time I will include that answer. In terms of price stability and green measures, there was a very short period of time when we had the chance to implement monetary policy measures, the purchase program and the credit operation. And it was justified because we undershoot our inflation target. So we were in an easing period. We tried to stimulate the economy. And well, this is essentially the only place in time when we really had the chance to go forward. The second question was, how do we know that such green measures wouldn't contradict to financial stability? So the mandates with financial stability? Well, we make relatively small steps. And before we make any step, we do our homework, we do our calculations, and we assess how much of the excess risk that could be created in the financial system or even on a bank level. So for example, for a capital requirement program, we do the math for all the banks. So what if all the banks use this capital, this preferential treatment, and after all, we can conclude that these measures should be in line with our objective regarding financial stability as well. I hope that clarifies. If not, I'm happy to follow up later on.
You could perhaps later on bilaterally exchange further if there is something unclear. But I would like to ask if there is any further question, perhaps.
I have one. Actually, Márton, another question that I found very interesting about the borrower-based measures and discussion I had recently with actually the authors of those studies is what's the social impact of these kind of measures? So I know that Hungary, and I think maybe Lithuania had a special plan as well for renovating single-family households, etc. And some early findings of these schemes was that it actually can increase inequality. Because usually it's quite expensive, right? So across the region in CE, our research showed, because we worked on a project like this maybe a year ago, most houses will invest incrementally. So they will change X number of windows, then 1 year they will change the roof. They'll ask their cousin from another village to come and potentially do it. So the quality of the work and the materials are also questionable. And then the major issue with these schemes was those who can afford to spend 60, 70,000 euro or borrow, they usually are from high-income households, which then improves, of course, the value of their assets and everything, but that still leaves a whole big chunk of people behind. So what's your view on that, how to mitigate that risk? Are there any additional measures?
Well, it's a fair point. So two things. Yeah, obviously, if you're supporting a niche product, that would help, basically not the poorest people who has, everyday struggles. But and I'm happy to be in the limelight, but this is not a central bank role. So the whole issue is essentially belongs to the fiscal side, right? So we're not there to solve, housing crisis. We can use or small, sometimes bigger possibilities, just to give some incentives and help market developments. But I don't think that a central bank should address, social inequality problems, to be
Then I guess
fairly honest.
systematically you would need to focus majority on real estate, commercial, etc., real estate that's used as collateral, right? Because you wouldn't want that from a systemic point of view to lose value and then jeopardize the financial stability.
Yeah, possibly.
If I may, I think the just transition angle is the angle that looks at these issues. So in Austria, for instance, we have we had quite popular subsidy programs. And what we as a ministry tried to make sure is that you had the program that's for the general population, and then you had a program for low-income households as well. But the main issue is still those who own their own flat and house, they have an advantage. And so we need to find better solutions for the renting people. But I think we are also learning in this process, and we need to look at the fairness of the entire transition overall. Who bears the costs of CO2? Who benefits from investments into access to renewable energy?
I just want to pick up that point as a final word. We need to understand transition as opportunity, otherwise nothing's going to happen.
I fully agree with you.
Electrification, cheap energy, food resilience, urban food production, green steel. Voestalpine's working on this. These are parts of opportunities. We have to characterize it, reframe it accordingly. There are opportunities. It will require working regionally, innovation regionally. There are some macro policy things we have to sort out. But the opportunities, given the changing world, are really immense here.
Okay, thanks a lot. I would like to close the panel now. We had very good input and very good food for thought for all of us, I think. Thanks a lot, Sasha. I think you're highlighting of adaptation and resilience as a major task. Thanks also for you, the highlighting of the need for plans, but plans which should deliver results for the people and for the citizen. Thanks also for Andreas for your contributions, also with the highlighting of the need of a more structured regional approach, also along the value chain. Thank you also for explaining that the Hungarian approach is not so unique that there is nobody following, but that there is some other institutions ready to take perhaps some more innovative, extraordinary measures in response to extraordinary challenges. And thank you also for you, for also your highlighting of the need to have measures and plans which finally also get a democratic support by the people. Thanks. Thank you.